Hello, everyone. This is Tiffany from Community CPA. I'm be the one doing the Saturday webinar for taxes. For most of you guys will be related small business owners. And let's go ahead start. First, I'm going to introduce about our firm. Our firm was more than 26 plus years of practice history. And then in our firm, and then we have members speak more than 10 languages collectively, and then we serve more than 10,000 clients worldwide. And then right now we have 4 branches. Currently we have Iowa, Minnesota, and California. And then we're working on to open our new branch in Houston in June 2024. And our CEO, Ying, she served on the National Taxpayer Advocacy Panel, which is the federal advisory committee that provides advice to internal revenue services. So she collectively receives information from taxpayers, so that way she will work with IRS to get better resolutions for taxpayers. Our CEO right now, she already produced 2 books. One is Appointment with Ying at 8 a.m., Appointment with Ying at 10 a.m. The newest one is the Appointment with Ying at 10 a.m. is about growing your business. So if you're interested in, you can go to Amazon and buy that, or you can stop by our office and we will have copy there. Before we start to share the full presentation, I want to mention that we, as a part of the service to all the clients, and then we're providing those seminars in order for business to grow at your own leisure. So we're not responsible for any damages the attendees may suffer as a result of following any advice or information provided. So although we are doing our best to stay informed, the current situation is very dynamic and the information could change at any time without any notice. Our information and advice are not illegal in nature and they should not be constructed as such. Please consult your legal counsel if you should need any legal advice. Okay, so our topic is about taxes for small business owners. So here we have 4 questions, and we're going to talk about those questions today. So the first one is, are you aware of different types of business taxes, and what type of taxes affect your business the most? And do you know which tax belongs to state, which belongs to the federal? I've heard lots of questions from clients regarding to that because they are not sure which one is federal, which one is state. And then the third question is there any taxes from county or city? Question, yes, we do. And then what is the most common taxes for someone who runs a small business? We will let you know today. So first one, we're going to talk about income tax. So income tax, we normally is referring to both federal and the states. Okay, so all business must file annual income tax return, and then the form you use depends on how your business is organized or formed. Okay, so for sole proprietors, it's reported through your Schedule C, which is on your personal tax return. And for some companies, if it's pass-through entities such as partnerships or 1120S, the S Corp, and then you will be filed those forms. And for the rest of type of entities such as C Corp, then the form will be 1120. So it's a C Corp. And then we also have estate tax trust tax return. Those are not listed here. The income tax based on each entities. So like I mentioned, we have different type. So for example, the Schedule C is going to report on your personal, and then on your personal tax return, you will have your normal income tax, and then plus you're going to add on to, there's a self-implement tax add on top of your income tax. And then for partnership, and the form you're going to file is 1065, and then you're going to receive a K1, and then this K1 will flow to your personal tax return, and then you're going to pay taxes at the individual level. Same for S corporation. So the form is 1120S, and then you will receive a K1 if you're the shareholder, and then you're going to pay taxes at your 1040 at the individual level. And then for C corporation, the form type is 1120C form, and then this one is not a flow-through entity. So normally there's no necessary connections between the C Corp and your 1040 or your personal tax return, unless you distribute some income, you receive some dividend income from the C Corp, and then you're going to report that on your personal tax return. Okay, so the self-implement tax is basically a Social Security and Medicare tax you need to pay because you work for yourself, and then those payments will contribute to your coverage under the Social Security system. And who needs to pay for it? So it's normally sole proprietors or a single member LLC if you didn't incorporate into a C Corp or do an election to be an S Corp or a C Corp, then you also need to subject to the self-employment tax. So when we always will recommend that clients, if you have Schedule C with sizable profits, and then you always will hear from accountants ask you to pay some estimate tax. So this estimate tax is normally if you're paying taxes on income, including self-employment tax, by making regular payments of estimate tax during the year. Same, even though for some clients, if you have S Corp or 1065, and you will receive K1 from your business at the end of the year when you file taxes, and then those K1 income, if you know that it's going to be a sizable profit and you're going to pay taxes, and then we will also recommend you to make some estimate tax payments throughout the year to avoid any penalties. Estimate tax are the method used by IRS to collect income tax and other taxes from business that they do not have tax withheld automatically. So when you receive K1s from S Corp or 1065, and those are the K1 income, it is going to be taxed at your personal tax returns, and then there's no withholding taxes on the from the K1. So that's the reason why not only for self-employment tax, or if you have Schedule C, and then if you have K1 coming to your personal tax return, please make sure that you have a habit to start working on your estimate tax payments. To figure out your estimate tax, you must figure out your expected AGI, which is adjusted gross income or taxable income, and taxes you pay last year. So you can use that as a reference. And if you need more details, you can reach out to your tax preparer. They will let you know what's the payments you need to pay. So normally these estimate tax payments will be paying in quarterly basis. And if you owe taxes last year, you probably will receive a voucher from your tax accountants regarding to the estimate tax payments. Okay. So for income tax audit, this is lots of people were asking us regarding to that. Normally IRS, we start from the IRS or federal. So IRS has 3 years statutory limitation. So which means whenever you file taxes, either by the later of the due date of the tax return or the day that you file the tax return. So they can go back to 3 years to asking or do the audit for those past 3 years. So normally the common triggers either the data mismatch, which means the information you report on your tax return is different from what they have on their IRS system. And then, so in our firm, we always encourage clients, if they have more information or they don't know what kind of information they have, so we always encourage them to do data match. And then the next one is data deviation score. So in IRS, they have their own system to calculate in certain clients, and they will have a certain range. And so, for example, if you're a restaurant, so they will pull all the restaurant data and to analyze. So if you are a restaurant client and you report something is out of the range, and then you'll be the one getting audited. And then, so it's kind of similar with this data connection from other parties. So for example, if you get audited by state or something, sometimes they will connect it. But right now is depends on the state, so it's not always connected. And then also another common ones is by whistleblowers. So if someone reports you, and you might get audited. And then other things where we're seeing lots of clients get audited because the Schedule C or Schedule E filers, because IRS, they would think that you don't have, your business is kind of small, and then you don't have good way to keep track of your income and expenses, and it's easily or most likely you will make mistakes. So and then so we'll always say that a Schedule E or Schedule C clients, they always easily get audited or have higher risk getting audited. And then where you have assets or cash in other country, like overseas information, and then you claimed earned income credit or child tax credit, and there was some missing information or the information is not matching. And then for the state income tax audit, so I'm just using Minnesota as an example. Minnesota statute of limitation is 3.5 years from the date of return is filed or the date of return is due, whichever is later. And then the limitation applies to the refund as well. So it's kind of similar to what triggers for state audit, because state will have specific program or selection. For example, you have the state will select all Latino-owned store, and then they will do a samples, and then they will pick someone from there. Or if you get audited from IRS, and then you will also trigger state, because if you need to, after the audit, if you need to amend the tax, if you pay some penalties for the on the federal or to the IRS based on some changes, and ideally you also need to do that to the state, and you will easily get audited too. And the same thing, last one is whistleblowers who report you to the state, so they might come to you. The next tax we're going to talk about is payroll tax. So payroll tax are the tax that employers are required to pay, and when they pay their staff their salaries. So when you have employees, you as an employer have certain employment tax responsibilities that you must pay, and the forms you must file. Okay, so employment tax is including Social Security, Medicare, federal income tax withholding, and the federal unemployment tax. And then sometimes you also need to withhold state side of income tax withholding and the state unemployment tax. And then the categories, normally you will see on the pay stubs to the employees, and it will show the deductions from the employees, and then also show the employment tax that you paid for based on the employees' wages for this Social Security and Medicare. And then it will show the income tax withholding for at the federal level and then at the state level based on the employees' wages. And then what triggered for payroll tax audit. So most commonly is just an unhappy worker. So if the worker, here's an example saying that the worker may have been very happy to have a flexible schedule and not have taxes withheld from their check, but at the end of the year, she discovered that she has to pay self-employment taxes. She may complain to IRS or to the state. So this is just an example. People might doing that. So if you want to know more about how to run payroll properly, and then please consult your payroll processor or consult to your tax firm, CPA firms. The next one is sales tax. So the sales tax is normally determined if the products or services you are going to sell is sales taxable. So normally, as a business owner, you need to apply a permit with the Department of Revenue of the state that you're in business. You need to, if it's the services or products you're selling is sales tax taxable, so you need to collect sales tax from customer. There's no no gray area or nothing that you need to follow the rule. And then once you collect the sales tax from customers, and you need to make the payment and then file the report to the state. Right now, we're talking about sales tax is just only on state level, and the different state will have different laws. So you better check with your state to make sure that you're following. And then sometimes we know that some services or products, they are sales tax exempt. So for example, in Minnesota, if you sell clothes, and then this is non-taxable, non-sales taxable. Okay, so each state has their own different requirements and laws. So please double check, and then if you're not sure, and then check with your CPA. And then sales tax as a trust fund. So that's the reason why once you collect sales tax from customers, and then you need to make a payment and file the report, you cannot keep it in your own pocket. And then for tax audit side, so normally what triggered tax audit is just some things is very we start seeing more these days is just online sales. So for example, if you have connected with other market online, and then if you never report those income, but they actually will issue a 1099-K, and then they report to IRS, and then but you didn't report it on your income tax, so it's causing the differences. So you will be likely getting audited. Okay, and then there are also some common triggers. For example, if you have like past audits with negative results, so if you had those histories, and you will also be likely get audited. Next one is property tax. So business property tax is a tax that business pay on the assessor value of real property, like land or real estate that they own. And then the tax rate is based on the assessor value of the business land or real estate as opposed to the fair market value. So this is property tax is normally related to the county that you or the state you're in business at. So business property tax is regulated at the state and the local level, and then the local tax authority will notify the business of the amount of annual tax they are responsible for paying, so which is the county. And then in addition to the business property tax on land or buildings, business may also be obligated to pay another type of business property tax, referred as business personal property tax. And then this tax applies to any goods or products such as furniture, computers, printers that you own and that you use to operate in that business settings. So this business personal property tax is each state is different. So for Minnesota, I don't. So as far as we know that we haven't started seeing that. But I know for California or for Nebraska, they have those business personal property tax. So if you if you receive those kind of notice, if you're not sure, check with your CPA. The last thing, I think that's all the webinar we're talking about. And then before we wrap up, I want to introduce our firm partners. And then we have listed all the partners in the firm. We have Insa, which is just our CEO and the managing partner. And then we also have other partners listed here. And if you interesting, I want to set up appointments with all those partners listed here, you can go to our website, communitycpa.com, to book an appointment with them based on their areas they are focused on. And then if you have any other questions, you can always feel free to reach out to Catherine at communitycpa.com, and she's the one managing all those PR side of Community CPA. And then if you like our webinar or our channel, please follow us at the YouTube. And then if you here, we also list out our company phone number, and then we open from Monday to Saturday, 6 days, from 8:30 to 5:30. So if you're interested to stop by and see us, please feel free to do so. I think that's it. Thank you for watching.